The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time, Tuesday. We got about 30 minutes to go until the start of trading, and markets chopping around in negative action right now. You get an escalation to lower prices last night on the news that the president is going to move to fire Fed Governor Cook. We'll see if that plays out in court. It probably will if it happens. Nothing has been filed officially yet. She hasn't been charged with anything yet, so it's going to be interesting to see how that goes into play. But nonetheless, that was last night. That's where futures dipped a bit lower. And just from there, we're only negative by 4 points right now. You see that volatility last night at about 8 p.m. Eastern Time when we were at 64.60. You dipped to 64.35. We're trading right now, just negative by 4 points in the S&Ps. NASDAQ 100. You zoom in on the action last night, you drive down to a low of about 23,380. We're trading right now off 33 points. The Dow off a similar 30 points. Barely in the red, and you got the Russell in the green, up by 4 points or 0.2%. Bitcoin continuing pressure to the downside, off by $575, 110,000. Crude backing off from the 65 price point yesterday. We're trading right now at $63.80. Excuse me, we jump over to yields. All right, so last night, there's a little bit of the volatility on the 10-year. At 8 p.m., we're driving this morning. Okay, and you're talking about a 10-year right now at 4.28. Okay, all things considered, right where we were in the thick of the action yesterday. You jump over the dollar, which caught a bid yesterday, backing off a bit, but the dollar up to 98.50 yesterday. We're trading at 98.26 right now. And it's interesting that, on this news, okay, you have short-term versus long-term. And that's the only risk with the political nature coming into the Fed is the longer term. It's not a shorter term risk to the markets. The whole point of Fed Reserve independence is supposed to protect from the longer term, where politicians are always looking for the shorter term to ease capital requirements, right? Short-term treasury yields fall, long-term yields rise after Trump orders the removal of Cook. So we'll see how it plays out. But right now, you look at the yield curve, 30-year going higher, the 2-year down 3 basis points, the one most off the Fed, and the 10-year barely positive. And she said that he doesn't have the right, but we're going to get to see it play out, and you get a new chairman come May no matter what. And as I was talking about yesterday, you got 2 to 3 cuts priced into this market right now. Coming by year end, it's a lot of cuts already priced into this market. All right, you take a look at some of the equities movement. So, in the world of GLP-1s, Lilly, their weight loss pill, I can't even pronounce that name. Let's pull it over. Orforglipron, I think so, clears its latest trial, paving the way for approval. So this was the last step. With obesity and type 2 diabetes, lose weight, lower the blood pressure levels. Full clinical trial data required to start filing for approvals is what they now have. So the rate of side effects and treatment discontinuations in the study consistent with the 2 recent phase 3 trials on the pill. Now, the highest dose of the pill helped patients lose over 10% of their weight at 72 weeks. Okay, that's 23 pounds. So, going off it, that means if 10.5% equals 23 pounds, each person was starting at an average at almost about 225 pounds, something like that, right? Was the average starting weight. You get somebody down from 225 to 200, that's a radical decrease in their weight and probably a radical increase in their health. People who took the placebo lost 2.2% of weight. Now, here's what I'll say about the placebo 2.2%, folks. It'd be interesting to see how they study exactly how hungry somebody is at the beginning of that weight loss, how much they've eaten in the prior 24 hours. I wonder how the details. I'm sure they lock it down. It's a scientific study. But when you talk about weight loss in particular, right, and you talk about compared to a 2.2% weight loss among those who took the placebo, and you're only talking about over 72 weeks, and we're digging into it, but, these numbers, the 23 pounds, that's a real number, man. And for those with obesity, this is a real deal, and it's having real impacts for sure. But it's always interesting when you for 2.2%, you're talking about what? 1% of 220 pounds is 2.2 pounds. So that's about a 4.5 pound difference over a year and a half. And 4.5 pounds is probably what most people, not most, but for somebody who's weighing 230, you're probably getting a difference of weight just in water weight of 4 to 5 pounds from the morning to the afternoon. Hey, but guess what? They like it. But here's where 10.6 of those percent stop taking the pill. Okay? That's the thing to look at here. And so, this is a stock trading show, folks. I am not a doctor. And yeah, these are life-changing. But they also come with side effects like any other drug. Okay? And you got 1 out of 10 people. Think about the promise these are showing. These are real side effects, man. Period. End of story. Stop taking the pill. Yeah. 10.6% of those stop taking it. It's 1 out of 10. Nausea, vomiting. 23%. Almost 1 out of 4 vomiting. 1 out of 3 nausea. More than 1 out of 4 diarrhea. We'll leave it at that for your good morning on the morning market kickoff. With everything is risk reward, man. You're taking drugs, there's a risk no matter what. And yeah, you see those numbers, right? Because I imagine that there's a lot of pressure internally. I'm talking about people putting the pressure on themselves, right? They see all these stories. They see the movie stars losing a tremendous amount of weight on these GLP-1s. They see the statistics, and if they just stay with it, they can be fairly confident that they're going to lose a tremendous amount of weight over a period of time. And even with that promise, which is like the Holy Grail, 1 out of 10 are quitting. And I bet more than that would like to quit from the side effects, but they're willing to take them with comes. But hey, guess what? For a pill, yeah. Right now, you're going to be up by almost 3% to 715 on Eli Lilly. On that number, you take a look at the daily, though, under pressure right now for Eli Lilly. Take a look at the weekly. Down from 972, we're going to open at 715. S&P's negative by 3. We'll come right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. And we got the S&P slightly in the red. And in terms of where the market is thinking the Fed cuts, that market hasn't moved at all. We got the 10-year relatively near. And as I mentioned, right, the 2-year slightly lower, the 30-year slightly higher. The dollar, no huge reaction as you see if that Cook saga plays out. And let's shift to a little bit of trade. So China, always encouraging signs right now. Top Chinese trade negotiator set to head to the U.S. as talks resume, and he's going to come to Washington this week in a sign that both the U.S. and China seek to establish regular dialogue. That one coming out last night, reading it earlier this morning. And yes, so he is the top aide to Beijing's lead negotiator, is going to meet with deputies of the U.S. Trade Representative, Mr. Greer, and officials at the Treasury Department later this week, and with representatives of the business community. Zuckerberg and Mr. Cook, are they going to get their time? Maybe. So, that for the market, a good sign as talks continue. Yeah, this one's an interesting one. So the Journal, okay, talking about AI, and we were talking a little bit yesterday about, on the program, we're talking about robotics, right? That new big Hyundai plant that was built in Atlanta, in terms of the number of workers to robots. And in that plant, you're dealing with about 2-to-1 workers to robots. There's about 1,500 workers in that new Atlanta car plant, 750 robots. And that's not including the robots that are just shuffling things around the warehouse. That are the legitimate robots that are building the cars that people have to control to a certain degree. Now this one's saying, clear evidence AI is wrecking young Americans' job prospects. Boy, it's a tough one when you talk about productivity gains, margins and just AI being able to do a tremendous amount. I mean, Palantir was out there talking about that they're going to grow rapidly at the same time as they actually cut their headcount. We've never had the technological front before. I mean, think about the employee build-out that takes place at Amazon, right? Even the employee build-out that took place at Facebook. You're now going to have some of the best tech companies in the world saying, we're going to build out our company at the same time that we don't even need to grow the workforce. And maybe we can even trim it if we're already big enough, like Palantir. And so this has to do with research, okay, by 3 Stanford University economists. They crunched anonymized data on millions of employees at tens of thousands of firms. It's the clearest indicator yet of AI's disruptive impact. And look at the young workers. Look at the young workers. This is employee headcount among software developers. That's a tough one, okay? And there's going to be a reset in certain markets, and you're seeing it. Using records from paycheck processor ADP, right? The data includes detailed on their ages, occupations, and yeah, so far more comprehensive than the survey of households the Labor Department uses for its monthly employment report. Well, that's going to change with the new chief at the BLS. Stanford economists first looked at areas where AI can automate many of the tasks. Software developers, receptionists, translators, customer service reps, right? Among 22 to 25, 20% lower this July versus the late 2022 peak. For workers 26 to 30, close to flat. But if you're above there, you continue to grow. Because guess what? You're not doing the grunt work to a certain degree of what the younger workers are doing when they come on the job, which is what AI is going to be first to automate, especially when you talk about, look at it in customer service, right? Almost identical to what it looks like in software development. This is just the trend over the last year or two. No such thing as coincidences, as they say, right? Look at this chart for software developer. Look at the chart for customer service rep. Yeah. Harder to automate skills older workers picked up during their careers might be insulating them. Yeah, senior software developer, work collaboratively with non-coders. I mean, there are, and this is a productivity deal. You don't need the same amount of workers, man. You still need programmers. Okay, programming is going to be, and I was listening to a great podcast the other night, and what they were talking about was, listen, people are saying don't get into programming. People still need to know how to program. Okay, yeah, a lot of the work is going to be done by AI, but if you really know how to program and you can use the tools available to you in AI, you can create anything. And so those that actually have that power to manage the AI agents and what comes are going to have a tremendous path. But just doing the grunt work for a larger company, yeah, they're going to be trimming that workforce. And some of these in particular, I'll tell you a story that was funny. I got a call the other day, and the call was a call looking for feedback for a roof that I had just got put on a residence. So I replaced a roof in St. Petersburg on a property I have that's a rental right now. And I got a call, and it ended up being a human, but this is how funny this is. But it was, they were, and it wasn't, I think the person ended up being maybe a person, like an American at this Florida, St. Petersburg or Pinellas County roofing company, right? I think it was just a woman that worked there. But she had a very generic voice, and not in a bad way. It just sounded very like generically customer service in the way they were talking. Saying, "Hello, sir. I would really like the opportunity to gain your feedback on the service that you just had with our company, Roofing XYZ." I was like, man, am I even talking to a human right now? And I was like, well, what's it? And their answers were just so I found myself being like, no, I just don't have time right now. And I couldn't figure out whether I was talking to a computer or not in the beginning. We're there. And I ended up, I think, because when I said I just don't, and I didn't have time. It was the middle of the day, and I always pick up my phone because I have a lot going on right now, and many times it is spam. And in this case, I just didn't have even 5 to 10 minutes to dedicate my day to, I said, everything went great, I just don't have the time. And then they acted like a human in that reply. But up until then, it was so generically customer service. I was like, man, is this an agentic AI service bot that's about to go through a 15-question customer service feedback loop with me? It's going to be. And they're going to be so good you can barely tell what you're doing. So, yeah. You take a look at those younger workers. But, yeah, they're going to have to adapt. Listen, people said it all in the internet, folks, okay? The productivity gains are going to be remarkable. And that will be a good thing. And yeah, be nimble, be quick, right? Change. You can always fear change, but it's inevitable. And we're at one of those pivot points. S&P's down by 4. We're coming back for the opening bell. Don't go away, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have markets open. You got an S&P negative by 5 points right now. NASDAQ barely in the red by 18. Some pressure on markets overnight. Russell in the positive by 3 points right now. Bitcoin down $1,000, pressure to the downside. We hit 108,000 and change last night. We're at 109,880. Crude at 63.74. We keep our eye on rates. 10-year up one tick, but no real movement there. You jump over to the 2-year. A little bit of pressure for higher price, lower yield. Up by 2 ticks right now. And we jump over to the 30-year, and you see the divergence, right? The market always wins, man. They come at the expense of the potential for longer term having higher rates if you shoot on the short side. We jump over to the dollar. Yeah, holding up well, 98.27 right now. We check in on some of the Magnificent Seven. Apple shares down by 0.3%. Amazon down a similar 0.3% this morning. Microsoft off 0.2%. Tesla continuing to trade with strength, up another 0.5% today. We jump over to the big dog, NVIDIA. Their earnings this week staying strong, up by 0.6%. Some of the chip stocks, look at AMD, up by 3.2% right now. Intel slightly in the red this morning. And yeah, this one's an interesting one. So AT&T, they're buying the wireless spectrum from EchoStar for $23 billion. And that deal covers about 50 megahertz of nationwide spectrum and expands AT&T's 5G and fiber services. Put it on the ads and get it on the air, man. Now, there was an FCC inquiry over whether EchoStar was using and maximizing certain spectrum licenses that they own, including some that were sought by Elon Musk's SpaceX. They wanted them. They said they weren't getting used, and the transaction is part of the company's ongoing efforts to resolve the commission's inquiries. Not bad when you can resolve those inquiries by getting a $23 billion deal in all cash, and that SATS is their symbol. How about that one? 78%. Look at this. You go over. Come on. The market cap currently $15.4 billion. And they're selling $23 billion in an all-cash deal. So EchoStar to operate as a hybrid mobile network operator providing wireless service under the Boost Mobile brand. Yeah, airwaves, man. And you jump over to AT&T. A little volatility on that deal. Market seems to like it. Up by 0.3%. You get an acceleration there. You jump over to some of the others. Verizon shares. VZ. Down by 0.1%. We take a longer-term look at Verizon right now. It's quite a downtrend channel in 2023. Breaks out of there. You can see this consolidation, right? Let's put it longer term. When you look at charts like this, they give you nightmares, man. Breaking even for 28 years in Verizon. You had a lot of selling in March. You have that acceleration from the April lows. Nice sign of strength from the 42 area with some volume. But you can't get it going since then. Look how you gave it up last week. Not exactly a lot of strength. Double topping near 46. Same thing running into the highs of 2024. You're going to need some more volume to get through that area because you're running into this huge bar from March 10th on Verizon. And Verizon, great stock. For those that don't know, my mom worked for Verizon, retired from there. She was fortunate. Retired as a union employee, so I was able to get a great retirement. They're pushing all the union employees out. They bring back non-union employees, so they were willing to basically pay her to get out and retire early. And yeah, it worked out well, but that's not the case as they move forward. And look at this market, man. Shakes it off. Positive prices we go. S&Ps Just got green. NASDAQ green as well. Not NVIDIA, though. Yeah. All right, let's take a look. Jump to the NASDAQ. All right, AMD is a big one. Qualcomm higher. ARM. Pinduoduo up by 1.7%. Cisco slightly in the green. Tesla in the green. Yeah, market's flat. You can see it. No huge winners or losers, and the ones in the red, barely in the red. You jump over the S&P 500. Yeah, Lilly's in the green, as we talked about, up 3.2%. Some of the other winners, you got Boeing up by 1.3%. GE up by 0.7%. See, Netflix up by 0.5%. IBM in the green by 1.1%. But the two brightest in the S&P 500, AMD up by 2.8%. You got Qualcomm higher and Lilly. Visa up by 0.5%, and IBM in the green by 1% as well. Jumping around the Dow, jumping around the NASDAQ. Let's check out Ross Stores. That's a weekly. Some nice volume last week, but you barely closed higher. That's some serious tails. A little spinning top up there. You're coming into this bar in May. Their earnings from one season ago. Yeah, so Ross Stores, Dublin, California. Dress for less. Talking about a company that's valued at $48.5 billion. Boy, you look at this area, man. Yeah. It's what they call a visual area of resistance. 150 to 155. Maybe you get a little higher. But be careful in Ross, folks. Longer term. Well, on a monthly basis, we're putting in some good volume on this extension right now. Problem is, you're coming into May when you did 75 million. We've only done 60 million. And this is the last week. And the thing to be careful of here is that this is actually rolling over. Got a lot of volume in May. Watch that May volume. You break above that, you break into the upside. But you're looking at a high of 155 for Ross. And anecdotally, in my own head, Ross, that ain't TJ Maxx. That's the other thing. I'm biased. S&P is off by 5. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the direction. For up-to-date pricing and performance, go to direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. You got the S&Ps right now flat, NASDAQ 100 slightly in the green, Dow off by 17, and the Russell leading the way, up by 9 points or 0.4%. You jump back to the dollar right now, DXY, trading at 98.24, no real volatility. All things considering, the volatility of the Fed right now, rates pretty consistent, hanging in there right now, just up by 2 ticks. Excuse me. And this one from the Journal. So you have the Democratic mayor candidate who's getting a lot of attention, Mamdani, pledged a rent freeze and is rattling mom and pop landlords. Now, what I never understand about this one is why individual investors have to subsidize on any degree. It should be the government that is subsidizing market rents, and how that exactly plays out. Yeah, easier said than done. I get it. Rent stabilization, great. Society wants to make that deal, but in terms of just capping certain buildings is a tough one. So put big building owners on notice when he pledged a rent freeze on rent-stabilized apartments in New York. But you have a bunch of landlords who own small apartment buildings and say that Mamdani's housing policy could damage their business. And you better believe it, folks. The numbers on the real estate market right now, in Florida, housing prices are great. But the rent side of things is difficult in terms of what the prices are selling for versus what they can rent for outside of even the stabilization. So sales of the rent-stabilized multifamily properties, 10 or more units, have declined since 2019 as, those laws have went into effect. Now, here's where this, segues, and it's the way I think of everything right now, because it's the same exact thing. You say to yourself, right, why don't we subsidize the home builders, give them a $10 billion grant, and then have like a 30% non-voting share of Lennar? And we'll provide them what they need to start building single-family houses that are affordable in America. Why isn't the president taking a 30% stake in Lennar? We should provide them funding, and we should demand a 30% stake, and it should be dilutive in shares, and that will allow for the government to step in. And the reason why I say 30% dilutive of Lennar is that would be about a similar $10 billion position to what the government just took in Intel. So you provide Lennar with $10 billion in government funding. You take a 30% dilutive share in that company, and then you allow them to use that money to provide single-family houses and better serve the needs of the American citizens in the way that the private market is not right now. In the same way that the government wants Intel to be, a company that they can give money to while retaining ownership for, because the private market is not doing a good enough job of servicing the needs of the American people. And that is what the case is made with the CHIPS Act, right? That money was essential. We need American chip production in America, but the private markets are not doing that. And in order to serve the American citizens' needs, we are now going to take private companies, we'll take pieces of that. The government will own American private companies, and that is the best way to serve the needs of the American people. So, it just goes, why in the same, and I'm going to bring it up because my brain goes there every time, because the arguments made are the arguments of socialism and taking over businesses because the private market is not meeting the needs of the American people. And there's a real argument to be made that there aren't enough single-family homes being built in this country to serve those needs. And, so when you see stuff like that, now, what would make sense, though, is that if the government did it, at least they wouldn't be coming into the mom and pop landlords, which comes in there. And I don't understand why certain businesses, it's the same thing essentially, in terms of why certain businesses, why is that mom and pop going to subsidize affordable housing? Why are they? That's the business that they're in. People are in lots of businesses. Society should either subsidize it or society should not. But I never understand why certain landowners are just like, no, you're the ones that are going to subsidize it. That's the one we're going to pick. And people need, in St. Pete, there's some great programs, man. You build affordable housing, right? You get variance. You can build higher. You can build, with greater floor area limits in terms of what you can build if you build affordable. And there's actually an outstanding, so check this out, folks, okay? This one's a good one. Live Local. Look this up, okay? Live Local in Florida. This one allows you to build in commercial and industrial zoning, okay? But what it allows you to do, it's called the Live Local Act. It was passed in 2023, and it's designed to create affordable workforce housing, okay? Now, the kicker here, though, is that many times when you get into affordable housing, it's very difficult depending on where you are, and this is it, Live Local Act Florida, okay? 2023 state law, known as SB 102. Check this out if you're in Florida, anywhere in real estate, folks, okay? This might be the best amount of information I give you if you are in real estate at all in the state of Florida. So you have industrial and commercial, okay? And what it does is, the key kicker here is, okay, is that if you have 40% of the units in your building are at 120% of the average median income for where you live, okay, which would be Pinellas County and St. Pete, Hillsborough and Tampa, okay, and those numbers vary depending on where you are, but it's 120% of the average median income, the annual median income, not 80%, 60%, some are. So 120% of that median income number is somewhere in the neighborhood of renting out units in Pinellas County at, and I got to get the exact number, but you're looking at like $2,800 a month all in, as high as $3,100 sometimes, their estimates. I'll look to it, okay? But you can see how, and then the kicker is, right? I saved the best for last. You are allowed, now this matters, if you're abutting a residential, there's things that come in, but if you're in, let's say, an industrial lot, okay, and you're surrounded by some industrial lots, you can build as high as any building within 1 mile of where you are. So imagine, there's many lots in Florida that are in areas where you're not developed, maybe you're in industrial, maybe you're close enough to city workforce areas, but you don't have a lot of height in terms of you can go up maybe 36 feet, maybe you can go up 45. Folks, there's certain areas in Florida where you got the right lot and you're developing this, you can build up 20, 30, 35 stories, okay, to where you're downtown you're talking about. And all you got to do is put 40% of the units to be at that 120% of AMI or lower. And the other 60% can be whatever you want. And it's got to be that way for 30 years, though. But 120% of AMI, folks, look it up. It's not that low. It's a decent market rate, and that's only 40% of the units in the building, okay? And yeah, so those are certain areas that you can do it, and you're not subsidizing it with certain landowners. You encourage affordable housing. S&P's off by 5. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P is negative by 1, and you check out, part of this. And so dig into this live local, folks, if you're in that area at all, because it's remarkable. So I talked about that. The height requirement is the amazing thing here, okay? And it's meant to that you got to remember, the key is here, 40% of the units got to be in its area median income, AMI, okay? But when you look at the numbers of 120%, okay, and that's where, many workforce housing zoning requirements where they give you extra abilities to build higher, use greater use of land if you're going to have workforce housing. So the median household income in Pinellas County, okay, is about $70,000. Now, when you pull up the St. Pete City, okay? These are the numbers that come up when they're dealing with here the area median income. And you can see when you get to the 120% number, okay, this is annual, all right? And you get a household size of 2, you're talking about renting or selling to somebody that can make up to $100,000 a year. So all you have to have is 40% of your units able to be accommodated by somebody in this income bracket, 120%, okay? And you can rent to them or you can sell to them for affordable for 30 years, and it gives you all of those height requirements, zoning requirements. There's even funding that's available, okay? And then they have what's called a live local dashboard, folks. You pull it up if you just Google, Florida Live Local dashboard, okay? You can take a look and they'll show you how many units are being built, and you can actually drill down in the map to see the exact developments where they're taking place, okay? Here's one right here in St. Petersburg that's going to be 304 units, right? 40% of them are going to be quote-unquote affordable, okay? It's going to be completed in 2026. They show you the exact parcel ID, so you can see all of these, right? And that's just in that one unit they're talking about. But big time, check that out, folks. So real estate, housing, yeah, you better believe it, man. Lennar, flat. S&P's flat. Folks, Basil Chapman's coming up next. Have a great day. Have a safe day. Stay tuned for Basil, folks. We'll see ya.